Hey everyone, welcome back to Corporate Decoder, the place where we read between the lines of corporate filings, and today we are looking at Flotek Industries Incorporated, their latest report, and it looks like some key players are getting a nice little payout. So what is the big news? Flotek Industries Incorporated just announced some significant equity awards to its top executives. This means their CEO and CFO will be receiving stock, which is a common way companies try to tie executive pay to the company's success. Let's dive into the details and see what this really means for Flotek. It all comes down to a decision made by the Compensation Committee of the Board of Directors on the 19th of November 2025. They approved grants of what are called equity awards. Think of these as giving company stock or the right to buy stock in the future to Dr. Ryan Ezell, the Chief Executive Officer, and J. Bond Clement, the Chief Financial Officer. Now, these awards come in two main flavors. First, there are what they call Restricted Stock Units, or RSs. Dr. Ezell is getting 39,532 of these. Then there are Performance-Based Restricted Stock Units, or PRSUs. He is also getting 59,298 of these. Mr. Clement, the CFO, is also getting his share. He's been granted 17,969 RSs and 26,953 PRSUs. So both top executives are being rewarded with company stock. Let's break down what these mean. For those RECs, the ones that are not performance-based, they will slowly become fully theirs over 3 years. They will vest, meaning they gain full ownership in 3 equal parts each year, starting 1 year from when they were granted. This is pretty standard. It means they have to stick around to get the full amount. Now, the PRSUs are a bit more interesting because they are tied to performance. Up to half of these performance-based units will vest, meaning they will become theirs if and when the company hits certain financial targets. These targets are based on something called earnings before interest, taxes, depreciation, and amortization, or EBITDA. Essentially, it is a measure of the company's operating profit. They have to meet these targets during the year 2026, which is from the 1st of January 2026 to the 31st of December 2026. And importantly, they still have to be employed by the company until the 31st of December 2027 to get this payout. There is another part to the PRSUs. Up to half of them can also vest based on how the company's stock performs compared to a specific stock market index. In this case, it is the Russell 2000 index, specifically the oil equipment and services part of it. This performance is measured over a longer period from the 1st of January 2026 through the 31st of December 2027. If Flotek stock does better than its peers in that index, they can earn more of these PRSs. Again, this is to incentivize the executives to boost the company's value and stock price. All these details about the awards are laid out in specific documents. The time-based RSUs are covered by a plan filed here as Exhibit 10.1, and the performance-based units are detailed in Exhibit 10.2. These grants are all part of Flotek's bigger compensation strategy, specifically under their 2018 Long-Term Incentive Plan, as amended, which you can find filed as Exhibit 10.3, and is incorporated by reference from a previous filing. Now, the filing itself doesn't include the actual financial statements in this particular section, but knowing these executive awards are tied to performance and stock price is crucial. It signals what the management believes are key drivers for the company's success. We are talking about profitability and relative stock performance. This 2018 long-term incentive plan, which has been updated, is the framework for these kinds of executive compensation packages. It is designed to align the interests of the executives with those of the shareholders, meaning they get rewarded when shareholders benefit. Now, while this report focuses on executive compensation, typically these 8K filings are made to report specific events. In this case, the event is the awarding of these equity grants. For the deeper financial story, we'd usually look at their quarterly 10Q or annual 10K reports. However, understanding these compensation packages gives us insight into the company's priorities. Looking at Flotek Industries Incorporated, they operate in the oil and gas services sector. This is an industry that can be very cyclical, heavily influenced by commodity prices and global energy demand. Companies in this space often use equity awards like these to retain top talent, especially when the market is volatile and attracting skilled leaders is challenging. The performance metrics chosen for the PRSUs directly reflect this. They want to see strong operational performance measured by EBITDA and outperformance in the stock market compared to their industry peers. So, what does this all mean? On one hand, awarding equity is a positive sign. It suggests that the leadership is committed to long-term growth and is being incentivized to deliver tangible results. The fact that they have both time-based vesting and performance-based vesting shows a balanced approach. RFIs encourage retention, while PRFIs push for actual financial and market performance. However, as investors or observers, we need to remember that these are forward-looking incentives. The true impact will depend on Flotek's ability to hit those performance targets. We'll be watching to see if their EBITDA grows and if their stock price relative to the Russell 2000 Oil Equipment and Services Index performs well over the next couple of years. The risks are clear in this industry: a downturn in oil prices, geopolitical instability affecting energy markets, or even increased competition within the oilfield services sector could all impact Flotek's ability to meet the performance goals tied to these awards. This could mean fewer shares end up vesting, and the intended incentive might not fully materialize. In conclusion, this report highlights a strategic move by Flotek Industries Incorporated to reward and retain its key executives. The structure of the awards, particularly the performance-based units, signals a clear focus on profitability and market competitiveness, while the intention is to drive shareholder value. The ultimate success rests on the company's execution and the broader market conditions. It is a standard practice, but it is always good to understand the specifics and the potential implications. Alright, that is our breakdown of Flotek Industries Incorporated's latest filing. What is your take on these executive awards and what they signal for the company's future? Do you think performance-based awards are always the best way to motivate leaders? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of finance and corporate filings. And don't forget to check out our Discord channel linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next segment.